Good evening, traders. Welcome to your 7-minute market update, utilizing technical analysis to predict direction based on human emotion. Today is July 29th, 2012. Lots to talk about, so let's get started. But before we do, I just want to apologize for not issuing videos without letting you guys know for the past 3 days. It was due to unfortunate health issues. To be honest, I wasn't gonna make a video tonight, but with what little subscribers I do have, I figured, I'd still want to give the best analysis I can for whoever watches my video. So I do appreciate you guys stopping by to watch my videos. So I have to at least make the videos. It would make sense. So the test results come in next week or so, and we'll see what happens for the future of these videos. In any case, I just want to apologize for that. So without further ado, let's get started. This is the SPY, which is the ETF that tracks the S&P 500. And what day do we have these past couple of days towards the end of the week? All right, so I had to review the previous video that I made. To be honest, we had this candle here which had higher volume here, and even though this wasn't a reversal candle, I did say that because there's higher volume, this could indicate exhaustion. Not to mention, we are already into these three support levels. We had these two calculated levels plus this 50 moving average. Now, because it was already hit once, there was a chance that it could potentially break through and hit this 200 moving average. Unfortunately, this 50 held up due to some good Europe news, which I doubt is going to hold up. And we went right back in to this rising wedge pattern here. How could we have been able to tell that this was a fake out or a head fake or whatever you want to call it? Well, simple. First of all, like I said in previous videos, and I've been always trying to mention that when you're in the money, you want to put either a break-even stop or a in the money stop. That way, you protect yourselves from losing substantially a great deal of money. And we wanted to be sure that we had this type of protection with this candle here, simply because we were on higher volume, and that could have indicated a reversal, and that's exactly what it did towards the end of the week, Thursday, Friday. Okay, so um, in addition to that, after we had the breakdown, I did make mention, and this was very important, it really was the decision maker if we could close below this candle here or close above this candle here, and that would put me in either a bearish or bullish situation. And so if you had followed that theory, you would not have fell for this drop here. You would not have been bearish. You would have waited for a close below this candle here, and we didn't get that on let's see, was this Tuesday and Wednesday. Okay, so without that confirmation of a breakdown, there was a chance that we could have reversed, especially on higher volume here, and that's exactly what it did. Now, what happened on Friday was there was some, Thursday and Friday. Friday was a continuation of the good moves, or the good news, I should say. And in addition to that, we were in low volume area, a low volume area. So, I mean, this Thursday's candle was only 156 million. Okay, the Wednesday candle here was only 129 million. Friday, however, we have 236 million. 236 million after a breakout. To me, in my opinion, this would have been a breakout because this was a substantial resistance point here. We had this 137.74, which held up pretty well on this area here. Right, remember, it's only good after the first one. Second one, I don't trust it, and that's why it pierced through. You probably could have got maybe some intraday trade off of that. Let's take a look. Yeah, so you probably could have gotten an intraday off of that. I mean, if you look, it went right into the 137.74 level here, and then we got somewhat of a small pullback before continuing higher. We actually just bullishly consolidated and then moved higher. But this 137.74 level did hold. It was just an intraday hold, and it wasn't very strong anyway, and it's because it's already been used. Okay. Now, so I'm pretty much letting you guys know what you guys already know. Here's the thing: because we did now, I've seen other analysts what they've been reporting, and they're saying that there's a potential that this could already reverse. Because this is such a big move here, and yeah, that's a possibility. I mean, after a big move here, again, you normally get a 25% retracement, like I've been saying in these past candles here. Like we had this candle here with a 25% retracement. We had this candle here with a 25% retracement. We had this candle here with a 25% retracement. This candle here actually had a 50% retracement, so on and so forth. Whenever you have a big move such as this, a candle that are these sizes over here, then you normally get a 25% retracement before possibly continuing higher. But I don't really think that there's much more in here. I did say in the very long time ago that I thought that this would be the last leg down, but because it didn't hit this upper trend line here, I was a bit of a skeptic, and I did mention that you have to be careful because there is a possibility we may get one more leg up before coming back down. Okay, before this flag actually plays out. But there's going to be a stipulation in there. There's going to be a contradiction that I'm going to do later on in this video that I'm going to show you, so that sometimes these head fakes indicate a possible pattern failure, and if that actually happens, then we're going for the gold, we're going for the sky here, and unfortunately, that's just that's what the charts are saying. Okay, so let me get a little bit more into this here. We have this level up here. If we connect these two levels down here, there's a possibility that we could get all the way up here into this area over here, which is the 140 area. We have this still this upper trend line here that's never changed. So we're at 138.68. It's only less than $2 more before it reaches resistance, and then at that point I'll probably initiate a short. Let me load my drawings. Oh, there it is. 141.36 was the drawing I had in the previous videos, but you notice I did the calculation around here, and after every big move I like to recalculate to make sure that the calculation still holds. So remember this number 141.36. Let me load my new drawings here. It's actually, I got a number here at 142.70. So all I'm basically saying is there's a potential. It doesn't mean it's going to get there, but there's a potential that we could go all the way up to the 142.70 level before coming back down. Okay, and this would be pretty much around the double top over here, which could be a possibility. But you know what, these patterns are a little bit easy to trade in my opinion, because if we do hit this level over here, which is the 140, maybe, I mean, it depends how long it takes to get there, maybe at a 140, 140.50 level, maybe around here. Well, anytime it touches this top trend line here, I'll probably take a short, and my stop would simply be any close above this trend line and a confirmation above that. Remember, same leg here, a confirmation would have been needed before continuing down. Same leg here, my stop would be a confirmation if we close above this upper trend line here. But that's more into the future. I have to think more short-term trading, and that's basically what I do. Now, even if I readjust this bottom trend line here to have this point here, we still broke down. Okay, so this was still somewhat of a head fake, and if this candle was the breakdown candle here, we still did not close, not even close close to the bottom of this candle here. So there's no confirmation even if we manipulated this bottom trend line. So that should have told you that there is a possibility we could have reversed up, and that's exactly what we did. In addition to that, so we had these levels here, right? And a lot of people think that a lot of analysts, I don't know why, think that we're going to probably get a reversal soon, because this candle was on higher volume. But how I always say, if the candle is on higher volume like this one here, that signals exhaustion. This could potentially signal exhaustion as well. Don't get me wrong, that is a possibility, that is in the charts. However, you have to keep this in mind. This here, like I stated a little earlier, this is pretty strong resistance. This is considered a breakout. Okay, so we have this channel-like form over here, and this could potentially be a breakout. Let me delete all these lines here so it's easier to see. Okay, so we have this, resistance points here, right? And then we had this resistance points here, right? So I mean, if we take out the rising wedge pattern out of the equation, and we just look at this sidewards trading pattern here, any breakout on higher volume is a valid breakout. Okay, so that's what I'm trying to get at. This doesn't mean that we cannot reverse tomorrow. It just means, like I said, as a chess player, and this is why it's very important to play like a chess player, to be aware of the possibilities of what the charts are showing you. This is definitely something that you want to keep in mind. This does not mean just because we had up some upside and then high volume, it does not mean that we're going to start breaking down already, because unfortunately it is considered a breakout of this sideways channel here. So we may pull back into this level here before going higher. I mean, it really depends on how you draw it, and when you have contradiction going on, you really just have to be cautious about it. Right now I am stopped out of all of my short trades. Okay, I have a in the money stop on one of my trades. I think I made only 10% on that. This was a doozy in my opinion, but the rest I stopped out break even, so I really didn't lose any money at all. So that's trading. I mean, that's how you preserve your capital. You have to put those stops in place, so either you break even or you get out with a small loss. Okay. All right, so I had some technical difficulties. I was actually talking and nothing was recording. So I'm just gonna quickly zoom out here again. I just wanted to show you guys something here. I don't know if I already said it in the previous recording, but let me just zoom in around this time here. There's a similar pattern, and I just want to explain to you something. We have a down move here, just like we have now. We had this up move here. I don't know if you guys have been trading this long or what, but I'm pretty sure that most of you guys spotted this pattern back in this day here. This was a bearish flag pattern, and then we had a breakdown, right? We didn't confirm below here. We went back and retested this bottom trend line here, and then we broke down again. This was not literally not a breakdown. This was most likely, if anything, a failed bearish flag pattern. We traded back up into the flag here, and we just continued higher from there. Any failed pattern, you'll have a big move following any failed pattern. Okay, so basically what I'm saying is this is a similar move. We have this down move here. Okay, let me just zoom out here, and then we have this bearish flag wedge pattern here. We tried to break down like we did previously, but we didn't. So there's a potential that we could break all the way up and through it. Now here's the thing, right? Just a quick recap. I'm going to take a short here. Okay, I'm not making a recommendation to do anything, but this is just something that I'm thinking of doing. If I take a short here and I close above this trend line and I confirm the next day, I stop out for a small loss and then I wait for this 142.70 level. If not, then this is pretty good resistance, and then this guy should be pulling back at least into these calculated levels here. My 142.70 level here is a new level, so it really depends on how fresh the data was, or how valid the data was, or how manipulated the data was, I should say. The markets are manipulated. They've been manipulated for years. We just have to have that cautiousness. And I don't know if I said this 5 minutes ago, but just keep in mind that there is volume here, nice substantial volume after our move up, so there is a possibility that we could already make that move to pull back. But then just keep this in mind, that we have these upper patterns. I'm going to delete my drawings again. We have this upper resistance point here. We have this bottom resistance point here. I'm sorry, this bottom support line here. This is sideways trading. On any breakout with volume, that's a valid breakout. It doesn't mean, I mean, we close above this candle here on Monday, then this is a valid breakout. I expect a pullback to this level here, and I'm probably will start looking for long trades if that happens. Okay, so really depends on how you draw your lines, and when you have contradiction like this, you just have to be very careful. Again, as a chess player, you just have to be aware of what the potential possibilities are, and then protect yourself based on that. Okay. Alright, this is a chart of the UUP. Let's take a quick look here of what's going on. So I had these calculated levels apparently. I don't remember these levels, but I guess I should review the previous videos. But a lot of times, if you're new to these videos, these levels can be one of three things. A good resistance point, a good support point, or a good gap point. What I mean by gap point is, a lot of times when these levels are broken, like it did on Thursday, a lot of times that signals continuation like it did on Friday. It actually recovered on Friday, but it normally signals continuation because if you notice here, it actually the gap down actually starts at this level here, which means it broke major support, and which in my opinion signals potential continuation to the downside, at least for the intraday, which is basically what it did. Now here's the thing: after it broke this mathematically calculated level here, and the 20 moving average here, and this bottom trend line here, all of these areas here are very, very strong support areas. There's a lot of technical damage being done on the dollar. Now everybody knows that the dollar is inverse to the market, so dollar up, markets down, and vice versa. Which means that if the markets continue down, then the SPY will continue higher. Okay. Now, how much further can the dollar go down? That's everybody's question because we've already broken through so much support here. I really don't think there's going to be much more downside. In fact, this gap fill here looks pretty tempting to me already. I don't know why it reversed over here. I should do more calculations. The most previous calculations were done on this day here. So I'll probably do a little bit more calculations after this big move happened on the dollar. Let's look at the dollar futures. All right, these are the dollar future. This is the chart of the dollar futures, the U.S. dollar futures, and then what we have here is some more technical breakdown here. And this was all based on the news. Again, it's the manipulation, and this is the thing that you need to protect yourself from. The manipulation. It's always going to be there. You just have to be aware of it. Now, what happened was we actually closed below Friday's candle here below the 50 moving average, which signaled weakness. Again, we need a confirmation. We did not get a confirmation, which means a close below this candle here. So on the futures, as you can see, the futures are already recovering. This is the after hours candle. We could potentially actually make a comeback, which would signal a reversal down in the SPY. So which one do I believe? It doesn't really matter in my opinion because you guys know where my entry points will be. Simply put, okay, simply put, on the SPY here, we have the, let me load the drawings once again. We have this upper trend line here. So if the markets go up, I wait, I take a short at this upper trend line. If it closes above and confirms, then I stop out and I wait for this 142.70 level. Excuse me. And if the markets reverse tomorrow, or start coming down on Monday, which is definitely a possibility, however, unlikely simply because Monday is normally a low volume day. So if the institutions want to prop the markets higher, they could easily do so. Normally you get a 25% retracement, so just keep that in mind if you're an intraday trader. That's been the norm. Again, nothing's 100% guarantee. I give it a 65 to 70% chance that it may happen due to the history of, if you've been following my videos and you've been watching since back in these days here, every time we had this down candle here, we would have a 25% retracement. Even this down candle here, we created a doji, but we had this 25% retracement. We had an up candle here, we had way more than a 25% retracement. So whenever you have a big move like this, you have a move over here with a 25% retracement, you had a 50% retracement here. We didn't get one here. You see that? We didn't get one there. So again, even though most of it played out, even this move over here, we had way over a 25% retracement, and the candle wasn't even that big. So every time this has played out already, I'm counting, maybe 70% chance that it will play out again on Monday. But again, Monday is a low volume day, so I would think that a doji candle would be more likely, and we may actually consolidate before pushing higher. And the consolidation should be short. If we do turn over, I'm thinking, Tuesday or Wednesday would be the day, simply because more volume should be coming into the market and we should start coming down then. Now, if we start consolidating bullishly on lower volume, okay, and then we spike higher, well, let me take that back. Let's just say we start continuing higher, and this is actually what I want to see. We have a candle here, we have a candle here, etc., and we have lower and lower volume. And then all of a sudden we create like this doji candle up in this trend line here on higher volume. Then that'll be the signal for me to short, and that's when I'm definitely going to take it. But that's a perfect pattern in my opinion, and a lot of times perfect patterns don't play out when you have a lot of manipulation in the market. And again, that's why you have to be a chess player and be careful and protect yourself and expect the unexpected. Basically that's the bottom line. In any case, I just want to apologize for not making my previous videos. I do appreciate you guys stopping by and watching them. I will take There was one user that posted a comment saying that I should separate the video because the videos are getting too long. So yes, I will take your advice on that. I'll probably do a video on the stock market and a separate video on actual stock picks. That way you guys don't have to sit through a whole video, which can be 30 minutes long. I love trading stock market so much I just can't stop talking about it. But due to my current situation right now and my current health issues, I can't make promises to continually make videos throughout the week every single day. But I will say this, that I'll at least have 2 or 3 videos out every week until all of this has passed. And I'll start doing a video every day after that if everything works out. And thank you very much for stopping by, and I hope to see you in the next video.